It's time now for Real Estate Update. With Wusha Chandra of Globenet Realty, real estate is our world.
Now we're standing here face to face, afraid to move.
Well, ladies and gentlemen, once again, welcome to this very exciting segment of the weekly real estate update with Usha Chandra of Globenet Realty. With that, welcome to the show, Usha.
Thank you so much for having me on the show, Ms. Chandra and Australian Indian Radio.
And it is always wonderful to have you on the show. And once again, after a bit of a turmoil area, let's look at what's been happening right across the nation. In terms of auctions, what are the clearance rates? What's happening in that scene?
Yes, after long times, there's some very good news. Preliminary clearance rates hold above 60% across combined capitals as auction activities rise for the second consecutive week. Auction activity is up for the second consecutive week with 1,839 capital city homes auctioned last week, with each of the capitals recording auctions volumes line up above the recorded previous weeks. Capital city auction activity rose 14.2% from the previous week of 1,611 and was up 4.3% higher than the number of auctions held this time last year, which was 1,764. Out of the 1,399 results collected, 62.6% reported was successful results, the highest preliminary result in the 12-week period. Last week's result was up 1.2% points compared with the previous week, when preliminary clearance rate of 61.5%, later revised to 56% at final figures, was recorded, while this time last year 64.3% of the capital auctions were successful. So good results. It's going up a little bit slowly, but surely it is going up.
And that is right now, the key point that everyone talking about is the interest rate hike. So, what is happening with the interest rate? Here's the report.
Rising interest rates aren't taking the shine off this jewellery store's sales just yet. But in these times of financial uncertainty, more customers are seeking a safe haven in gold.
We've found that people are coming to us for really special pieces for either occasions, birthdays, engagement rings, but also to treat themselves, I think.
The owner is worried about what'll happen when the Reserve Bank's back-to-back rate hikes start hitting her customers' wallets. She's also got her own mortgage to pay.
I would say that, adding extra stress to people who could be spending their money in the local economy doesn't seem logical to me.
But that's exactly what the RBA is trying to do. It wants to slow spending, announcing another 0.5 percentage point hike to take the cash rate to 2.35%.
Now, this will be very difficult news for a lot of Australians with a mortgage.
The RBA Governor, Philip Lowe, admitted higher interest rates are putting pressure on household budgets, with the full effects yet to be felt in mortgage payments. The nation's biggest lender says it takes around 3 months for an increase in the cash rate to be felt by borrowers. The Commonwealth Bank says that means the Reserve Bank is effectively flying blind.
Well, there you go. The Reserve Bank might be flying blind, but right here, talking about real estate, what kind of effect will it have on real estate as it moves forward? And is it a good time to invest or not?
Implemented its second consecutive 75 basis point rate hike, which was their fourth rate increase in the last 4 months. And this recent run-up in rates has already started to impact commercial real estate, and we're beginning to see a shift in how deals are being capitalized, demand from the capital markets, and valuations and pricing in the market overall. So if you're a commercial real estate investor or commercial real estate professional working in the industry right now, and you want to make sure you're prepared for what these increases might mean for the market going forward, in this video, let's talk through some of the biggest effects of rising interest rates on the commercial real estate industry specifically, and the ones we're already seeing materialize within the market right now. So the real estate industry is one that traditionally has relied very heavily on debt financing, with commercial real estate assets commonly being levered up with loan proceeds equaling 60, 70, or even 80% of the total value of a property. And with that, commercial real estate investors tend to be heavily influenced by changes to the cost of that capital, which could result in market conditions shifting pretty dramatically as a result of interest rate swings. And for real estate investors, in a rising rate environment, one of the first things to take a look at is the attractiveness of other investment options that investors may have moved out of during a time when interest rates were near zero, and how that attractiveness might change in the future when rates increase substantially. U.S. Treasury bonds are generally considered to offer what's referred to as a risk-free rate of return, essentially meaning that investors don't see these as having any significant default risk, and they can count on a relatively certain payback amount at the time the bond matures. And traditionally, commercial real estate has also been an attractive asset class due to the fact that commercial properties tend to produce bond-like cash flows with relatively consistent, stable income and significant tax benefits for direct property owners. However, commercial real estate cash flows are not bond-like in the sense that these are not risk-free, and commercial properties generally require a significant amount of work to manage, or require investors to pay a significant amount of fees for a third-party company or investment partner to manage these assets on their behalf. And because of this, investors will typically assign what's referred to as a risk premium to commercial real estate investments, with required rates of return that are significantly above the current risk-free rate in the market, to make sure they're being compensated for the additional risk and effort that inevitably comes along with a commercial property investment. But when that risk-free rate starts to see upward pressure, just like what's happening right now, this means that that base index on which that risk premium is going to be added also starts to increase, which ultimately results in real estate investors looking for higher rates of return on the deals they choose to invest in. And to achieve those higher returns, all else being equal, those investors need to reduce their offer prices, and when this happens across an entire market, this is when valuations really start to change. And while real estate pricing tends to be relatively slow to adjust as buyers and sellers adapt to shifts in the market, we're already starting to see this play out in the first half of 2022, with the Green Street Commercial Property Price Index flattening out from January to May of this year, and commercial property values actually falling in the index about 1.7% over the past 3 months. Now, the appetite of equity capital is important, but when interest rates rise, this isn't the only thing that impacts commercial real estate, and during these times, lenders also start to tighten up their own standards, which leads into the second point on this list, which is that higher interest rates generally result in reduced loan proceeds on commercial real estate deals, which can significantly increase the equity requirements from borrowers, and as a result can lead to a significant reduction in investor returns, all else.
So there you go. Today we looked at the commercial real estate sector for a change as well, to see, but all the things that have been talked about in that report apply to residential sales as well. So it's the same thing. Well, one of the things that has been suggested, that whenever there is a interest rate hike and everything, the key is in planning. People don't plan to fail, but they fail to plan. So if you have a sound financial management, you will get through it.
The days of cheap money are well and truly over. Across the country now, it's a guessing game. How high will interest rates go? Welcome to Sunshine in Melbourne's West. where Rebecca's just bought this classic renovator's delight.
The shed we bought is asbestos central, so we won't be touching that anytime soon.
Before Rebecca even settled on this property, her variable rate jumped 3 times.
We negotiated the mortgage back in March. We had an interest rate of 2.59 and now we're 4.59.
Yikes, welcome to home ownership.
Thanks, I know, it's great to be here.
She planned for rate hikes and has a buffer, but she's now paying $1,000 extra each month. Is it stressful?
Oh God, yeah. Yeah, look, it's been, you know, every other day my husband and I are talking about what we need to think about, what we need to change, what plans we need to put on hold.
1 in 3 Australians has a mortgage, and most of our loans have a variable rate that's set by our bank but informed by the Reserve Bank's official cash rate. Now, it's that official cash rate that's rising rapidly, and with it, the variable rates are too.
By the end of the year, we're expecting the interest rate to be around 3 to 3.35%. We may see a little bit higher, a little bit lower, depending on how the data goes for the rest of the year, particularly around consumer spending.
That puts variable rates around the 6% mark. It's a very different reality to the Reserve Bank's forecast just last year.
But the condition for a rise in the cash rate will not be met until 2024.
I am an economist, not a psychic. So as much as I can talk about what the data is pointing to, what our analysis is and what our research points to, at the end of the day, lots of unexpected things happen.
Those who wanted certainty, and that's about 40% of homeowners, locked in a fixed rate on their mortgage. Meet Alice Bullock. She bought her Brisbane apartment in December last year.
I love the location, and it's still got a really good sense of space because as soon as I walk in the door, I'm like, there's the river. It's like I'm home. The Reserve Bank, when I was buying, was saying that the interest rates weren't going to go up for at least another year, maybe longer. Despite that, I still chose to get a fixed-term loan.
And it's lucky she did. She's on 2.69% until December next year.
I don't know what the rate is going to be in a year and a half, and I don't really want to think about it too much.
During the pandemic, the banks cut fixed rates down to record lows, and unsurprisingly, we saw Australians flock to fixing. The high being July 2021, where a record 46% of loans, new loans, were fixed.
But all good things must come to an end, and each month more and more of those ultra-low fixed-rate loans are expiring. This is the forecast variable rate they'll revert to. And by the middle of next year, when most people's fixed-rate loans will have expired, well, interest rates will be peaking.
People are finding that they're hit with interest rates that are double, sometimes even triple what they were previously on.
It's nothing like the good old days of 17.5% interest rates in 1990.
But this is a recession that Australia had to have.
But it'll still have an impact.
It's all here on your doorstep, ladies and gentlemen. At 980, at 1,325, and it is sold here. Sold.
There's lots of superfluous spin-it auctions, but in the not-so-distant future, it's likely more houses will have to be sold.
We'll tell them on the phone, welcome home.
We won't see distressed sales the moment interest rates go up. It takes a bit of time to feed through the system.
SQM research provided to 7:30 shows about 6,200 homes a month are selling under duress, which isn't many compared to the usual pre-COVID levels of 15,000 a month.
My concern is that if we get to an average variable lending rate of somewhere around 7%,
$750,000.
I think we could see distressed activity skyrocket at that point.
Selling, sold.
We probably would get up to 30 to 40,000 properties selling under distressed conditions, and that would represent a fairly large component of the marketplace.
Anger is already...
A fairly large component will be selling under the stress, and that is not a good sign. Well, ladies and gentlemen, this has been a very special presentation of Globenet Realty and the weekly real estate update. Well, right now it's time to say goodbye from the show.
And sales section, and so that's what we have got in the sale and rental market at the moment.
And that is good to see that there's activity levels are on the rise, so which is a very, very good sign. So once again, sir, thank you so much for being on the show today and sharing this very informative session with everyone.
Thank you so much for having me on the show, Australian Indian Radio.
So ladies and gentlemen, that's all for you in this weekly real estate update with Usha Chandra of Globenet Realty. Until next week, it's goodbye from us.
Globenet Realty. Globenet Realty has been the longest established, trusted and respected agency in its trade area. Usha Chandra, Director of Globenet Realty, provides honest and ethical service to her customers. If you are thinking of investing in Brisbane real estate market, or if you are seeking professional property management, then you should contact Usha Chandra today on landline 3865 4466 or mobile 0419 775 416. And for further updates, log on to our website www.globenetralty.com.au. Globenet Realty is your own local real estate agency. Situated at Shop 5228 1 Sandgate Road.